Hi everyone. So this is a third video from this series Finding Leader in this cycle. So in this video I am going to discuss about how I have built the position and how I am managing those positions. So let's recap what we had discussed in last two videos. So in first video we filtered out some stocks from Nifty 200 when market was not in great structure. So we filtered out those stocks from the list of Nifty 200 and anticipate that these stocks can be a leader when there will be recovery in the market. So those were here you can see those were the six stocks which we have filtered out. The when I created the second video, it was all about how to grow the long-term portfolio. So the purpose of this video is that once we filter out stocks which could be a leader in this cycle, and if any of that stock is part of our long term holding also, then how we can convert some of the position from that particular stock into our long term portfolio, and that is how we can increase the investment in our long term portfolio and making sure that there is a growth in long term portfolio. You guys can watch these videos if you haven't watched it. Okay, moving to next slide. So yeah, these were the those six stocks which we filtered out from Nifty 200. So those are ICICI Bank, HCL Tech, Info Edge, which is basically Naukri, Max Healthcare, JSW Steel, and Tech Mahindra. So we'll go one by one and see how those stocks are doing now. So when I created that video filtering out the stock from Nifty 200, that was released on 24th November, and all the assessment was done till 22nd November of candle. So wherever you are seeing this green arrow, that basically indicate the 22nd November. So in ICICI Bank, the reason for selecting this stock was that RS was great, and the stock exactly at 50 DMA we saw a great candle. So the intention was that we are seeing a great candle at 50 DMA, so there is a chance that this stock might be a leader in next cycle. And as we can see, after that what happened, that it open as gap up, then consolidate, and then start again moving up and making a more higher low structure. I did scale in this stock. Also, this stock is part of my long-term holding. So this stock, I mean, if this I have builded the position in this stock, and if the trade goes well, I will convert some of the position into long term. And yeah, you can watch this video also. I will provide the link I will provide the link in the description where you can watch this video how to grow long term portfolio, which will give more clear idea. Also, if you notice the structure which this stock is creating is very interesting structure. So this is nothing but volume contraction pattern, and this also basically indicates that there is a high probability that this stock may go further higher. And we can see, I mean, I want that for if we see further solid candle on above, you can expect a good return on this stock. So still it's in buying range. I did scale I did created a position in this stock at this level, and of course at this level. Okay, now moving to next stock, which was HCL Tech. Again, HCL Tech is part of my long-term portfolio, and last time when we discussed, the 22nd November candle was this, and we saw that it has created a base and it was doing higher high, high low kind of structure. So I did build some position at this price level, but in next few session what happened, I saw this candle, so I decided to exit partially. This is the advantage when you take position as a trade instead of investing. Basically, create position first and then convert it into investing if that trade works in your favor. So the reason why I did partial exit here, because it is entirely possible that the stock may go further down also. But when that doesn't happen and again it come out from this range, I did rescale, or basically did bought the quantity again. Okay, moving to next. This is Naukri. So here also again we saw that on 22nd November candle was very solid and exactly at 50 DMA, and next on 24 November it started moving higher and higher, and I didn't scale in this candle because there was a long week. But when I saw that in few session this stock is not coming down, actually it is creating a base here, so I did scale in here, and when I saw this another good candle I did scale in here also. Next scale in I will basically do when there will be pullback. Now I will not do further scale in this stock, because risk and reward will not be in my favor. So when I say pullback, what it does mean, that the stock may do some come down and maybe consolidate, and then then start moving again up. Then I will further scale in. Moving to next, it is Max Healthcare. So here also exactly at 50 DMA we saw the a solid candle. In next few session, the candles were not printed good, but it is still exactly at 50 DMA. And when this candle printed, so it was kind of confirmation for me that there's a high chance that this stock will go further high. And when it actually come out from this base, so I actually created my position here. Basically I scale in, I already had position in this stock, so I did further scale in this stock, and now it is moving higher. Now I will wait for pullback, and then only I will do further scaling. Coming to last two stock, JSW still. So this was the again candle at 50 DMA, but after few session I saw that it is trading below the 50 DMA, so kind of resistance it was facing exactly at 50 DMA. So I decided not to build position in this stock, and also Nifty Metal was also not doing great. So, and there was better opportunity available in other sector also, so I didn't build any position in this stock. Other was Tech Mahindra structure wise everything it was all good. The reason why I didn't build any position in Tech Mahindra, because I already have built position in HCL Tech. So, and the reason of building HCL Tech was that HCL Tech is part of my long-term portfolio. So I'm already building position in HCL Tech. So for me, it didn't make any sense to build position in Tech Mahindra also, because they belong from same sector, and both are large cap also. So building position in one stock was making sense for me. So kind of all the stocks are doing well except JSW still, whatever we filtered out, which is good. And market is also showing good recovery, so which is also good. So coming to the quickly sector review, basically index. So all this green arrow which you are seeing, this is on 22nd November when we reviewed all those stocks. So you can see that Nifty 50 was in very bad shape. It was the structure was not good in Nifty 50. But if you compare it with Nifty Bank, Nifty IT, and Nifty India Digital Index, their structure was much better compared to Nifty 50. And the strongest among them was Nifty IT, followed by Nifty India Digital Index, and then of course Nifty Bank. The reason of filtering out those stock was this only, because all sectors were either falling or consolidating. So if we are able to filter out the stock in this phase itself, then when markets start recovering and the filtered out stock become leader in this recovery phase, then you can gain good amount of profit from those position, and some of the position of course you can convert it into long trade. Okay, so now once we have filtered out our stocks, that these are the stocks where we want to build a position which can become leader also in the next cycle. Now the question comes arise, when to build position and how to build position. So just for an example purpose, I have taken Nifty India Digital Index. So here you can see that in this period of time when this stock was consolidating, there is a very less resistance overhead. This is the all-time high, and thus this index hasn't fallen that much from its ATH, and in this range itself, once it printed a very solid candle and moved above 50 DMA. This is the first opportunity where some pilot position can be built, or some maybe 10%, if you want to invest 1 lakh in particular stock or anything like that, you can at least invest 10% or 30%, maybe 10,000 or 30,000 kind of investment can be done, and positions can be built. And once it come out from this range and give some kind of confirmation that now the structure has moved from the structure has improved, and now it has moved to higher high low kind of structure. So here actual scale in can be done, maybe 50% or 60% or 70% scale in can be done. And and if you see that stock or index is further moving up and up, so at this position, if you are scaling now in at this level, it will not make sense, because from a risk and reward perspective it is not favorable. Just to give an example, if you are building a position here and if stock goes down, your stop loss would be very small and you can easily exit from the trade. Similarly here also, if let's say the stock moving down, you can easily exit at once it violates the 50 DMA. But at this point, your resistance would be either here or here. It can happen anything. So this here the risk is high and reward is less. So at this point, I will basically sit tight and do nothing, because it makes no sense to take the trade, because risk and reward will not be favorable here. What I will do, I'll just wait for the pullback, when again it will, again there will be some correction will happen and it start consolidating, and then it start again moving up, or structure get improved and again it start making higher high low kind of structure. Or maybe it shows some very solid candle, and let's say it goes down like this and consolidate, and then it start moving up with a solid candle and it make another solid candle here, then of course I will scale in this candle. So okay, so now this I try to explain from a index perspective. I Now I'll show another chart where I have built position. It's whatever the concept I explained in the previous slide, there's the same thing will be applicable here also. So this is a chart of policy bazaar, uh, and this is the previous all-time high, and it started correcting from its previous all-time high, and then it started consolidating. Okay, and it has created very long base, and after that it corrected. And if you see the RS also, the RS is in very better shape. It is just moving high only, so RS is good even when it was creating the base also. So once it come out from its base, the candle was okay. I wanted more strong candle, but in the next few session what I saw that the stock is moving high only, it's not coming down. And I basically build my position aggressively here, and now the stock has moved significantly higher. At least I think I have some 17-18% gain in my current position. So at this point, I'm not going to invest. What I really want that in 7 to 8 session, there will be some correction or consolidation happen, and then this kind of solid candle get printed. Basically, structure get improved, and again it start moving higher. Then at this point, I will fully I will scale in, because that now my, let's say if this act as a support, that time it comes down and start consolidating and then start moving up, then this can act as a support for me, or stop loss. Basically I can take that as a stop loss, that if I build my if I fully scale in at this level and from that it comes down and breaks here, I will simply exit. And it would be basically at cost or maybe at minimal profit, because I already have some cushion from this gain also. Coming to next stock, Max Healthcare. I think this we already discussed that exactly at 50 DMA we saw this candle, and another candle got printed just above 50 DMA with the solid, and I did scale in here, and now it has moved up. I am not going to scale in here. I will wait for some correction and some consolidation, and then again it will start creating a higher high high low kind of structure, or some kind of pullback is visible. I will rescale in this stock. This is the another stock where I builded the position. The reason being, I saw this three candles, three solid buying candles. So if you go in technical terms, this is called as three white soldier. This basically represent that there is immense amount of buying is happening, and when this kind of three solid candle printed, there is a high chance that this stock will go further high. There is a book called the Japanese Candlestick. I can share the link also. You can buy it from Amazon, where this concept has been explained. So here I taken a snapshot from that book, that the three white soldiers are a gradual and steady rise, with each white line opening within or near the prior session white real body. Each of the white candles should close at or near its high. It is a healthy method for the market to rise. So at this candle I did build very aggressively, okay, because I was anticipating that the trade will go this stock will go further high. In the next 2 or 3 session that happened also, it printed a very good candle, and but after that it started correcting. So my point was that maybe it will get corrected, consolidated, and then at this point itself, if I see a very solid candle, I will scale in. But what happened that this in this day's session, this stock fall almost like I think 5 or 6%. Then I decided to exit from this trade, because whatever I anticipated, that didn't work out. And when that happened, it's better to accept and take the loss. So I took the loss in this trade, because it is entirely possible that from this level, this stock go further down also. If something doesn't work, just get out from that trade. And also, as I said, that I build the position very aggressively here. Basically if I wanted to invest 1 lakh, I already invested 70 70,000 in that trade, and now waiting for the correction would not be a good choice, because if it goes further down, then that loss will also get increased. Also, when this kind of candle printed, then each line act as a support. So it is entirely possible that this stock may consolidate here, and then again it start moving up, and then it prints a very solid candle here. If that kind of thing will happen, I will further build my position in this stock, and yeah, we'll see after that what will happen. So this were the few stocks where I try to explain that how I have built the position and how I'm managing my position. We did discuss about that. We did discuss about that if position doesn't work, then when to take exit, and if it works, when to sit tight and wait for the next opportunity or pull back to scaling further. So now what is the next step is what we are going to discuss. So as a current status from my side, I have already built the position, and also the good thing is that Nifty 50 and other sector index has already started making higher high, higher low structure. So structure wise, there is a improvement in the market, so which is a positive sign. Now second thing is, if still someone has not built any position, it is still okay. I do see that there are plenty of opportunities are available where fresh position can be built. You can check reality, even bank and finance stocks also, where there are still opportunity to build some of the positions. And if you need a framework, you can see the first video of this series where I have how I have filtered out those stocks from Nifty 200. Similarly, you can filter out stocks from reality index, from bank sector, from finance sector, and you will definitely find a few of the stocks where opportunities are still available where you can build your fresh position. Now, second thing is that, let's say if you have already built position in some stocks and that stock has moved higher, then what is the next step? The next step is basically sit tight and do nothing. Do nothing. Seriously. Wait for the pullback. Okay, to scale in further. You want that risk and reward should always be in your favor. Always keep risk and reward in mind while building the position. If risk and reward is not in your favor, then most of the time that trade will not work and you will end up in losses only. So always keep risk and reward in mind. I think the best example in this video I shown for Policy Bazaar, where I have already built a very good position when it started move up, and now I am in good profit. I have a very great cushion. I am not building any position here. I am waiting for the pullback. Once the stock will pull back, I will build again. I will scale in further. Okay, and that time that scale in would be very aggressive also. Same thing I am going to do for Max Healthcare also, and for other stocks also where I have built position. The last thing is that you have built position in some stock and that stock is not doing as intended, then don't hesitate to exit fully or partially from that trade. If something didn't work out, it's okay, accept it and take the loss, or just exit or exit partially. Don't wait for the correction. And yes, currently there are plenty of opportunity available in the market. You can if you stick to that stock, if you stick to that position which is not working as you intended or as you anticipate, you are just losing opportunity which are already available in the market. I already shown one of the example of this Engine International stock where I did build the position because there was a strong chance of moving higher because of this three white soldier candle, but it didn't work out as I anticipated and I took the loss in this trade. I can always rebuild my position. This is what same I did even in HCL Tech also. When it didn't, when I saw this candle, I did partially exit. And once it moved up, I did the re-entry. If the stock have further gone down, I would have completely exited from this trade. Okay, so if something is not working out, accept it and take the loss or get out at break even. Don't hold that position which is not working as you anticipated. So that's all for today's video. I hope you like the video, and please subscribe and give me thumbs up if you like this series, finding leader in this cycle. Thank you.